Good afternoon, ladies and gentlemen. May I request all of you to be kindly seated. We'll just start the session. May I please ask you to be seated as we start the session. We are just about to start the session. Please take your seats. Today's Breakaway Session 4 is on Housing for All, Role of Small Ticket Housing Loans. So, we'll invite all the speakers for this session. Mr. Vishal Goyal, General Manager, National Housing Bank. Ms. Neeraja, Managing Director, NABFINS. Mr. Shankar Tripathi, Executive Vice Chairman, Aadhar Housing Finance, and Mr. Patrick McAllister, Director, Financial Policy and Regulation. I'm sorry if I pronounce it wrong, Terwilliger, Center for Innovation in Shelter, and Mr. Naresh Kumar, CEO, NCGTC, Ministry of Rural Development, Government of India. Please, all of you are requested to come on stage. Mr. Vishal Goyal, General Manager, National Finance Bank, Ms. Neeraja, Managing Director, NABFINS, Mr. Shankar Tripathi, Executive Vice Chairman, Aadhar Housing Finance, Mr. Patrick. I'll leave the rest. Thank you so much. And for this session, may I request Dr. Saibal Paul, Deputy Director, Sa-Dhan, to moderate the session. Please, all of you who are here before the lunchtime, let's put all our energy together and clap for them. And this session will be interesting as we join together for a focus session on the potential of small ticket housing loans under 10 lakhs to bridge the gap. We will also explore how microfinance clients are ready to graduate to higher value credit and how they can be empowered through innovative lending models and policy support. So let's hear them. Saibal, over to you. So we will start the session with a presentation on unbanked to empowered expanding access step by step by Mr. Rajat Agarwal, who is a Chief Business Officer, Enterprise and Financial Assets Pay Nearby. Mr. Rajat Agarwal. A little louder, please, since we have less people over here. Thank you.
Hi, good afternoon everyone. It's a privilege to be amongst the leaders who have been shaping the financial inclusion. I think we all gathered with a common objective of how to uplift the Bharat. When we say Bharat, it's not only about the Bharat but also about the dreams, about the bringing dignity by lending, by building credit. And that is where we want to look at how we can work together to bring that kind of transformation. We have seen a change, the way borrowers have been engaging, interacting, have been paying to us, and how can some of these things we can help to build across for a bigger, better transformation across Bharat. Something very remarkable is happening in today's rural. Most of people have UPIs exploding. There's a very high access of internet which is happening. Every adult has Aadhar. The entire infrastructure is in place. The access is there, but do we really see that kind of usage? I'm sure a lot of customers still continue to pay in cash. A lot of customers, they are still not that financially empowered. The bank account exists, but they may not be active. There are UPI options available, but maybe UPI auto debits are not there. That is where we just want to bring in Pay Nearby. which is having one of the largest digitally distributed network across the country. Now think it more as a brain neural systems which connect the larger parts of the country where you have your customers, and through our assisted services, we are able to bring your strength of credit and our strength of the distribution to bring some of these changes in the ecosystem. Some things which we spoke, I think more as an industry, there are still the collection pieces which continues to be high. UPI adoption is picking up, but I'm sure a lot of work happening around. Limited auto debit facilities not being there, so at least the people have to go across, do a cost of collection, repayments. These challenges, I'm sure, somewhat impact the kind of cost, the repayment cycles, and obviously the further expansion of business. We just want to quickly talk about some of the things what we look at building. The entire idea is to bring an integrated solution, an integrated collection platform that not only solves for cash, but also helps to enable the digital part of it. Because there will be customers who are comfortable but are in the period of transitioning. So this entire platform helps to do cash collection, UPI collection through the dynamic QRs, payment links, okay, real-time dashboards, settlements, recon, everything happening. Cash management, a lot of customers continue to walk to branches, may not be that conducive. That is where our infrastructure of almost 1.5 million touchpoints across 20,000 pin codes makes it far more accessible. The branches, their cash can also be subsumed out here at the local retail touchpoint, okay, so that the money moves faster. The treasuries are being given real-time credit. There are dashboards to view. The recon settlements, everything improves definitely far better. I think Sathi, this is the customer-facing UPI is where we believe is the next big thing where we can look at working together. A lot of customers want to transition to UPI. Either they are not so datable savvy, or they have not been introduced, or they have not been using those UPI apps to start paying. We are in the industry amongst the very first TPAPs, okay, who has been able to provide those UPI handles, and we can help to get the customers who are currently not enabled on UPI through the entire digital assisted network which is currently there in 20,000 plus pin codes, okay, and these 1.5 million touch points. Savings account, I think the entire journey starts of the financial empowerment from a very basic account. A lot of accounts do exist, but the accounts may not be very active. Some of the accounts lies in banks where accessing those for doing a penny checks and others becomes a challenge. That is where we can help to solve step by step the entire journey into financial inclusion, which can start by opening their bank accounts. If the bank accounts are available, getting them enrolled on the UPI part. If the UPI is there, how can they be empowered through the UPI auto mandates? Okay, if UPI auto mandates are there, then how can we bring them access into the overall payment fold through the digital modes of payments? This is one of the most powerful part of the entire offering. The female borrowers, if they can become the ambassadors of financial literacy in their geographies, okay, it helps them to earn more, make them much more digitally stronger. The EMIs start flowing back in digital modes. Their eligibility for loans and reloans increase significantly, and obviously helps to grow the overall lending book. While it is not only a transformation from a business impact point of view, but I think that's a larger social impact which still sits here. So together, if we are able to combine some of those strengths, a lot of transformation can happen across. So the entire intent of this partnership is that every borrower, if they can become digitally savvy, every EMI which happens in the ecosystem can be paid digitally. Every MFI branch, instead of collections, is able to focus more around the operation and disbursement of loans. Every loan cycle we are able to somewhat impact, and overall the real Bharat becomes far more financially confident. That is what, so it's a partnership not only between a MFI and the tech platform. The idea is to bring the trust which the MFIs has in those geographies and the technology which Pay Nearby brings to the table. I think largely the entire ecosystem is gravitating towards a far more digital AI first, efficient estate, but obviously the entire core continues to remain human. It will remain to be human, and that is where we want to partner in your journey from that unbanked to empowered, from that manual to digital, and that from cost heavy to a more growth ready kind of model. So we look forward to working with all the partners, with all the MFIs out here, okay, to transform the entire Bharat together. Thank you. We are just outside. Any questions, queries, we'll be happy to address it outside. Sure. Thank you.
Thank you. Thank you so much. Now, let me tell you that Sa-Dhan and Habitat for Humanity has been working for the past 1 year to take out a study on deepening access to low-income housing finance. Today, we are glad that we can inaugurate this book, and may I call Mr. Prasanna from Habitat for Humanity and Mr. Gigi Memin, CEO and Executive Director of Sa-Dhan, to come on stage and inaugurate this book. May everybody please join. A big round of applause for Sa-Dhan and Habitat for Humanity. A big round of applause for Sa-Dhan and Habitat for Humanity. It has been a great journey in the past 1 year. A lot of efforts have gone to it. So congratulations, team. Thank you so much. Thank you, Gigi sir. Yes, Saibal. May I request you to start the session now?
Thank you very much, Rituvarna. So, welcome the speakers. You have always been kind to the sector, not only for the microfinance, but specifically for the micro housing segment, which is very, very much necessary. And you know that in India, after your Swachh Bharat mission, one mission is going on, housing for all. And this is a very potent time, possibly, we are coming up with this deliberation. We have seen during our this Swachh Bharat mission, microfinance sector has supported the whole mission wholeheartedly and developed a very good relationship with the customers, giving them the first loan to build up 50%, and then government gave them the subsidy, and then they worked on that one. So we are also looking forward for a lot of confluence between government's initiative and private sector initiative. Apart from that, we are also looking forward for a lot of funds to be coming in, because it is one of the need of the poor people. So in that habitat, they run their own business, they construct there's a water and sanitation unit, everything. So housing is the base of anything. So we are looking forward for a very good discussion. And you know, these statistics are everywhere. It's on like fingertip. What we want to do today is get your experience from the ground, your experience on the challenges. How can we overcome? Let us build up a confluence between all of us and take steps ahead of this one. So I got wonderful speakers from different areas, different walks of microfinance. We got Ms. Neeraja from the practitioner, like this microfinance institution. We got Mr. Tripathi. He runs housing finance company. We got credit guarantee mechanism, that's very interesting, that how can we use credit guarantee mechanism to guarantee our portfolio. We got Mr. Goyal very kind to us that from NHB, he would be giving us the government's perspective, and definitely Patrick, being of the one of the messiah of low-cost housing. I welcome you all. So the way I want to take the discussion forward is from the practitioner's perspective. Patrick, I have told already.
Okay.
Patrick, so he has been the messiah of this. I mean, he is very kind of iconic figure in this housing finance, low-cost housing finance. I'd be looking forward from him to get, out-of-box thinking, what country, what is going on, everything. So we can also learn from them and take the things forward. So first I would like to go to Neeraja. Neeraja, one thing, you are running one of the successful microfinance institutions, and being a subset institution of NABARD, you have a lot of insights from both of the sides. First of all, Neeraja, what is micro housing, low cost housing to you? What is the category? What is the amount? What is the quantum? Second, I would like to hear from you that how it will help your customer and microfinance sector overall to take this affordable housing, low cost housing. The first question to you.
Yeah, good afternoon. Good afternoon, I think just it's past 12 now. It's very nice of Sa-Dhan to invite me over here, and thank you so much. Last 1.5 days has been such good interaction at all levels, and I'm sure I'm enriched about everything in this space. With regard to housing and microfinance, I would like to say that affordable housing definition today is definitely not what we are looking at as a definition of housing finance. We are looking at up to 10 lakhs maximum loan, and actually when you think of housing in a rural area, normally a person would have their own land, whether it is some part of the agricultural land that they would convert into housing. So what is required is just construction of the house. So for construction, they need about 2 to 3 lakh rupees. They will normally in the rural area, they don't construct everything at one time. They will do first one room and then bathroom and then they extend. So the amount of money that is required for construction is 3 lakhs to 5 lakhs. And this is the area and segment that we would like to first to target. It is not possible for everybody to get into, not required also in a rural area or in a village to get into a 20 lakh category of loan. That is not required. So this is the target that we will, the amount of money that we will target for extending loans. So for this we have already prepared a blueprint with the help of the center, and we will be launching it soon. So that is what we are targeting at right now.
Okay, so 3 to 5 lakh category.
Up to 5 lakhs, maybe up to even 1.5 lakhs without security we will take.
Okay.
And up to 5 lakhs with minimum security. That is what we are looking at.
Okay. We are not talking about retrofitting, we are talking about construction of the house, right?
It can be construction. It will be mostly construction. In rural area, it is not that a builder is there building flats and selling. It is generally their own construction.
And how will it help your customer?
See, actually even today, about 20% of the customers generally move out into higher income segments. We are losing out these customers because they have moved up the financial ladder and they're looking for higher loan amounts, they're more aspirational. So they're moving into other areas. So this is the area, these are the people, even otherwise we are losing. We would like to retain these people and these ladies and give them better loan facilities. But now we are looking, of course, at housing as one major segment to diversify. And of course, the regulatory environment has also enabled us to do this because with the qualifying assets amount decreasing, so we have more money to lend to other areas. So this also will help us lending because for creating a housing, we need to have a separate segment altogether from the field to the head office level. So this is an expense that we were very frightened to take last year, because we were thinking about for 10% or less than 10% portfolio, should we make this much expenses? Now that we can target a higher amount of housing loan segment, so we will make this expenses from the field level staff till the head office staff. We will create a separate vertical and we will target this area.
Okay, got your point. I mean, we also know that our people on the ground, they need a lot of money to construct their own house. It is also a matter of pride that I do have a house. So that's also give them grace. Now I will come to Mr. Shankar Tripathi. He runs Aadhar Housing Finance Limited. It's one of the financial company which takes a lot of risk and help people to buy their houses and also build up their houses. I mean, thank you for coming here. We are honored to get you. Mr. Tripathi, first thing, what is low-cost housing to you? What is the category you are looking for? Second thing, I would like to hear from you that what are the risks involved? Because this segment, although in the regular time we get 99.9% repayment, but always we think that this is a risky proposition. So what kind of risk are you assuming in this?
Thank you, Dr. Saibal. Thank you, Sa-Dhan, for having me here. I think Neeraja has explained about the low-cost housing. So when we talk of low-cost housing, or rather as a company, we use as the low-income housing. Low-income housing means the customer whom we are giving, their income is low. Low-cost can be anything, but today's theme is that the microfinance customers are the low-income customers. And I'll just give you the latest data given by the Knight and Frank. 48% housing requirement in the country is from economically weaker section, that is those people whose income is less than 3 lakhs. And 35% requirement comes from the low income group, the income is 3 to 6 lakh rupees. So I think entire discussion I will confine into this only. And as of today, the National Housing Bank, when we meet the MD National Housing Bank and senior officer of the government, they always talk about how we can reach out to the EWS section. That is economically weaker section, because all these 48% requirement, all microfinance customers who needs houses, they are covered into that. That's the whole thought. That's why National Housing Bank has a scheme also for if you give loan up to 5 lakh rupees, they provide refinance on which 75 basis point they charge lower interest. That is the separate part I am telling. So low income housing, when we tell, about 67, 70 companies are working in the affordable housing catering to low income customers. Rest of the few companies are there, are the large premium customers, affordable customers also, and some are only in the premium segment. The public sector banks through their rural branches, they are also providing loans to the low income housing. In fact, when I tell you when we started the company, our loan ticket size used to be 6 lakh rupees about 10 years back. Today still average ticket size is 10.5 lakhs. Though we do some loans of 25 lakh to 50 lakh, something like that, but 87% of my customers are still below 15 lakh rupees ticket size. And if you want to see the which companies are actually doing low income housing, if they have 75% to 80% customers having loan below 15 lakh rupees, they are covered into low income housing. If you use the affordable housing, it is a misnomer, because Reserve Bank of India has increased the limit of 50 lakh rupees loan in the 50 lakhs plus cities, 45 lakh rupees loan amount in 25 lakh to 50 lakh cities, 10 lakh to 50 lakh cities, and less than 10 lakh, they have 35 lakh rupees. So I think none of the microfinance customer will come. We all have some segment of microfinance customers whom we have given loan, but the number is very minuscule. For my company, 3.5% of total 3.25 lakhs.
Why?
3.25 lakhs loan account we have, live account, and 3.5% is to microfinance companies, and hardly about 400 or 500 customers might be in delinquency. Out of 9,000, they are all performing well. So my point is that the low-income person is credit-worthy, he is honest, he has willingness to repay the loan, he has a dream of having his own house. It is not that but problem comes with that person, he is exposed to every type of risk, whether external risk coming in environment or the family risk coming into that. Key man is one. In either the woman is working, in very few cases where the husband and wife both are working, when the key man is having some problem, he falls sick, his family, somebody falls sick, his business gets disrupted. But even he becomes delinquent, he has resilience to come back to the business. I have seen the COVID time, most of these customers are from informal segment. They are not mostly formal, mostly informal segment. Even in those who are having service also in a microfinance unit or MSME, they are cash salaried people. They are broadly informal segment customers, but their ability to come back is very fast. I and you can't get a job if I lose a job for some time, we have to wait for a year. But the poor persons, they come into their job very soon. So my point is that this segment has to be taken care of, and their requirements broadly self-construction. As she mentioned, they have the plot and they will do the self-construction. If you permit, I can elaborate more. Most of the state governments, I have met many state government, I think Manikandan is here, he will confirm to it. They are constructing the houses under PMOI for EWS, where after subsidy of state government and central government, the houses are available to them for 2 lakh rupees to 7 lakh rupees depending on size. But problem comes for lending to them. The lenders are these days not willing, because last about 1 year and a half year, loans below 5 lakh rupees are slightly seeing more delinquency. So the urge of even the low-income housing finance companies, which used to be from 1 lakh to 10 lakh, that has moved from now to 5 lakhs to 25 lakh rupees. So that is one thing is coming. So I think if all institutions come together, this can be given. We have my friend from National Guarantee Corporation, he will tell that he provides guarantee also. So there are institutional mechanism available. MFI customers and the low-income housing finance company customers, they can collaborate together. The basic point is that MFI companies, they have got very strong knowledge of the customer.
Monitoring also.
They have the best of the bonding they have.
Right.
Their people keep on meeting,
Right.
which even the low-income housing finance company do not have that
Right.
much. But their strength is there. Our strength that we have low-cost funds, we have expertise in credit underwriting. If both the strength is collaborated and we together on each other's strength by doing this, so probably we can reach out large number of EWS customers for which the government and regulator is always pursuing.
Okay, thank you very much. Yes, the way you were telling about the segment, and we also wanted to coinage this segment. It is not micro housing, it is not low cost housing, it should be low income housing. One of the requests from Habitat is also there, how shall we call it? So possibly we can call it as low income household or low income houses, this segment especially. I would like to take it forward to Mr. Naresh Kumar, COO of NCGTC. It's a parastatal of Government of India, Ministry of Finance. They do have a credit guarantee facility. And how can this sector, microfinance sector, take the advantage of it? Mr. Naresh Kumar, if you can help us to understand where are we standing, how can we take it forward? I will come back to you once again with a lot of questions, but what's your opening remarks on it?
Thank you. Thank you, Saibal ji. So NCGTC is National Credit Guarantee Trustee Company under control of the Ministry of Finance, Government of India. Presently, we are managing 14 credit guarantee schemes of various ministries. These are for Samudra loans, so education loans, to start up, stand up, MSMEs. So there. So for MFI, so I feel there are the two schemes are available for MFIs, which they can get the benefit of that. First is credit guarantee scheme for micro loans up to 20 lakhs for income activities. So out of this scheme, so we are covering so portfolio of 73% of so guarantee we are so giving to our so member lending institutions. So in case of default, they can come to us and so get the claim. So till date, 11 MFI have registered with us, and around 20,000 crore portfolio has been covered under so guarantee scheme. Second scheme I feel is the so guarantee scheme for affordable so housing. So in these schemes, so this scheme has been so designed especially for EWS and LIH so groups, wherein they are having total family income of up to 6 lakh rupees. And here again, so guarantee coverage is up to 70% of the default amount. So this scheme will help our lenders, MFIs, to build the confidence of investors, lenders, risk mitigations, and also with regard to client retentions. So all these schemes are available on our websites. Anyone can refer our websites. Yes. Yes.
Okay. Thank you very much. So there are a couple of schemes. What I could understand that there are a couple of schemes where microfinance institutions can be part of it. It's a good news, but we would be looking forward for more from your NCGTC that direct access of microfinance institutions, and I mean that's a big gap in the overall architecture of microfinance of India, that the lenders to microfinance institutions, they can get the credit guarantee, but not the microfinance institutions own portfolio which they are deploying on the client. So I would be looking forward for that one. Then I will come to Mr. Vishal Goyal, GM NHB, being Apex institution. I need to tell you people a little bit of information about this working with NHB. So we are working Sa-Dhan and TCIS. We are working with NHB in two aspects. One is, we are building up liaison between NHB and the microfinance institution. Your housing finance companies, HFCs, and microfinance institutions, to build up different kind of product. One may be your lead generation, maybe BC, maybe other business correspondent agency model. So we are looking forward for that one, and a couple of areas we have also gone a bit far. We have gone, the verge of signing between the two types of institution. The other thing, this NHB has been kind. They have created a fund which can be channeled through microfinance institutions, and Sa-Dhan has given all the information about microfinance institutions of India with certain parameters. They have certain parameters, so we have provided them all the information. So in order to take this one forward, I would like to come to Mr. Goyal to get more understanding on it. What's your observation in both of the sides? If you do have anything apart from this one, if you can help us to understand. Because you being NHB, you being your Apex institution, we are always looking forward for your support. Can you please tell us?
A very good afternoon, everyone. Well, we've been talking about the microfinance sector to venture into housing, I think since the last 20 years. And NHB had actually taken up this sort of an exercise in the early 2000s, where we actually wanted the microfinance sector to venture into housing. And why the microfinance sector? Because of their reach and the type of target segment that they are referring to. Just for your information, as on today, the housing finance market comprises of the housing finance companies, which have around 20% of the market share, and the remaining 80% comprises of all the banks. The public sector banks, the private sector banks, the small finance banks, and the regional rural banks. And if you see the profile of these set of institutions who are lending for housing, you'll find that their portfolios towards the lower ticket size is actually decreasing, except for the housing finance companies. The housing finance companies' portfolio, say loans up to 25 lakhs, is around 40%, which was only 20%, say 5 years back. Whereas the public sector banks, you'll find a reverse trend. Now, for the target segment that the MFIs reach, I think we are not talking about 25 lakhs, right? And as Madam also mentioned, we're talking about small ticket size loans, say 3 to 5 lakhs. Because the housing finance companies, we have nurtured them over the last 10 to 15 years to develop certain underwriting standards where they can actually come out with a very good appraisal of all the informal segments. They not have a salary slip, they not have the income tax return, but they have developed these products for them and the underwriting standards where they're able to target loan size between 5 to 10 lakhs. Now, if you want to go below 5 lakhs, I think the microfinance institutions are just the right fit for this particular segment. And as Dr. Paul mentioned, NHB has always been very keen to become sort of a market maker. So, what we tried to do over the last 8 months is try to bring the housing finance companies and the select microfinance institutions who are wanting to go into housing or want to already have a small portfolio of housing. We haven't made much progress in that, even despite the fact that we've also earmarked certain amount that we would be lending this to the housing finance companies so that they can on-lend to the microfinance institutions. Presently, our refinance is restricted to only housing finance institutions. That would include your banks, your cooperative sector banks, your cooperative sector institutions and your housing finance companies. But in case we get some sort of a proposal from the industry bodies of MFIs, we can always approach the central government and they can also specify them as a set of institutions who directly we can give refinance to. So we have been in discussions with both Sa-Dhan and the other industry bodies of the sector, and once such a proposal comes, we could examine it and take it up with the central government. But what I feel right now is that this is just the, what is happening is a lot of these target segments have actually using a lot of online payments and all that, So there is already some sort of a financial discipline which has been set, including these particular target segment. Even their credit history is already set, You have this particular data. And this data is being used at least by the housing finance companies to actually lend to this. So the microfinance institutions, I think at this stage, this is just the right time for them to venture into housing in a big way and to take the lead. So at this stage, I think I can say this much.
Okay, thank you very much. So Neeraja is looking forward for it for sure. When we are getting from the Apex institution this kind of information that we need to go forward and ask them for this refinancing scheme, we'll be extremely happy to lead that one from Sa-Dhan's end. And now I will come to Patrick. Patrick, you are listening all these things. I will once again come back to the end as well. So what's your observation, the basic observation of yours on this discussion? How are you seeing it? How do you want to frame the housing finance, low cost housing finance, low income housing finance of India? How do you want to see it? How do you want to frame it? And what's your view? Some master comments on it. And I will come back to you on the last to get your, that what international communities are doing it. So first comment from your end. Over to you, Patrick.
Okay, thanks. Thanks, Saibal. And thanks, Sa-Dhan, for inviting me to this conference. Well, let me first explain a little bit about what I do. So I work for Terwilliger Center for Innovation and Shelter, and by the way, it was pronounced perfectly. And Terwilliger Center for Innovation and Shelter, or TCIS, is a unit of Habitat for Humanity International. Habitat for Humanity is a large non-profit organization based in the United States, but we also have offices in over 70 countries around the world, including India. Some of our colleagues are here from Habitat India. And those offices tend to be independent, locally registered, but we all share a common vision of a world where everyone has a decent place to live. And the Terwilliger Center's particular focus in that vision is to work with the markets that lower income people access their housing from. So we work both on the supply side and the demand side. So on the supply side, we work with materials manufacturers, builders, suppliers of building materials, but all focused on lower income people. And on the demand side, we tend to focus more on the housing finance. And so we have a fund called Microbuild that can lend to microfinance institutions, specifically for the purpose of on-lending to lower income people. And we also provide technical assistance to financial institutions, and we work with other market actors, so such as Sa-Dhan, to try to organize the market and expand the message that lower income people can afford affordable housing that is decent and safe and secure. So that's a little bit of what I do. Now, we've started realizing that the market can't function unless it has an enabling environment that meets its needs. And so for that reason, we have to work with the government, and we have to make sure that the infrastructure that the government puts in place allows the market to serve the needs of lower income people. And I think we've already heard on this panel a little bit about some of the areas where that's very important. Now, I've got to say that usually when I come into these meetings, I tend to talk about India, because India is one of the good examples that we have globally of putting together an infrastructure both on the enabling environment side and on the market actor side that provides affordable housing finance and affordable housing products to lower income people. But I do want to say about the way that that is structured in all countries. One of the things that you need in order to make affordable housing a reality for lower income people is an enabling policy at the national level. And I want to differentiate between policy at the national level and policies that happen within ministries and within different organizations that are involved in the sector. And India has a very good national level policy framework, Housing for All. And it also has a very good national level affordable housing finance policy that is implemented through NHB. So that's not unique to India, but it's certainly one of the few cases we have where you have these national level policies that really support affordable housing finance and affordable housing products and services. Now, when you get down to the level of policy, one of the things that is very important is data. We can't actually implement and track our progress on policy and in the market unless we have the data to back it up. And so that's an area where I think India has been good. It could probably be better in making that data, and first of all, in collecting more nuanced and granular data from the market actors themselves, as well as at a national level from the government, and making that available transparently to all actors. And that has the effect of allowing more entrance into the market. And when you provide the information, and some of what my other colleagues were saying about how bankable lower income people are, how the risk elements are not insurmountable when serving these populations, that all relies on data. And if you can make the data available publicly, then you will be able to attract more entrance into the market and serve more people at lower cost. So that's a good thing, and that's something that the government needs to do. And when we get to the level of policies, I think one of the things that I was hearing is that there are some tweaks that need to be made to specific policies. And we kind of consider 5 different types of policies that are necessary in order to make affordable housing finance and affordable housing products available to all people. And one of those relates to products and services themselves. So we have regulation from the National Housing Bank around who can and who can't borrow for housing. And there's as Mr. Goyal was just saying, sometimes the MFIs don't fit into that. And that's not unique to India. There's a lot of countries where microfinance is treated somewhat separately, and we have a bit of work to do in order to upgrade the regulations that guide institutions to make sure that the institutions that the lower income people are actually using to provide services are able to provide the services within the government framework and benefit from some of the government policies that allow them to do that at a lower cost. So cost is a huge issue for lower income people, we all know that, and we can help lower those costs by including in the institutions where low income people actually get products and services into the frameworks that allow the government to subsidize those costs. PMAY is a globally recognized example where the government of India has really been able to ensure that lower income people have access to very affordable ways to build their homes, but there are gaps. And those gaps are what need to be filled, both from a policy perspective and then from the market perspective. So they have to work hand in hand, and those types of policies can only be changed if we have the data to back it up. And so that's kind of in a nutshell what I would say I see in India as some of the areas that you're doing incredibly well in from a global perspective, and then maybe that you can still deepen a little bit to allow more affordable.
Thank you very much. So the major thing which I could understand from you, the things are there, but there are a lot of supportive things we need to be bringing in the system to make it really happening. One is that infrastructure should be there to construct the houses, and also then only we can finance it. So I will come to Neeraja. Neeraja, you are running MFI. I mean, now there is this qualifying asset is there a bit increased. You running the micro finance institution, catering low ticket size to the, low income people, this is a little bit higher one, right? This one. So how do you see your institution, and what kind of capacity do you think that this industry needs to make it really happen? Because this is a low ticket, little bit higher ticket size. The risk is also a little bit higher than that, although there will be like the house to give you the backup, but still.
Yeah, thank you. With regard to size of loan, there is one thing that is what we are dealing with right now is a totally unsecured loan, though it is about 70,000 rupees average ticket, somewhere 1 lakh rupees up to 1 lakh rupees. But this is a totally unsecured area that we are lending. So now what we intend to move into is to a secured area where there will be some sort of paper or some sort of, even though it may be not be a mortgage, but some sort of security we will be having. So quantum is one thing, but I think it will be easier to deal with it because there is security. So, but with regard to other things about running an MFI, then there is where we get funds from, what is the tenure of the loan that our borrowings, and what is the tenure of the loans that we are extending. This could definitely be a problem, but I don't see myself having a problem with matching ALM. I'm sure I can manage my assets and liabilities. But there are many other challenges. Quantum of loan is a very small part of the challenge that we will be facing. There are many other challenges. Number one is, like all the other speakers have told, especially Patrick, which he has very clearly said, there is some policy gap which is there. The limits that have been set for a credit guarantee, or the amount that is the interest rate cap that is there for from NHB side for refinance or eligible institutions, which I'm sure getting the eligible institution is easier, but the interest rate cap would be somewhat, I think, more challenging from NHB point of view also. So this is one of the most important challenge that needs to be addressed. That I'm sure if all the policy makers are sitting and if you take a realistic view of what exactly it is, because servicing a loan of 25 lakhs and getting a loan of 5 lakhs serviced is a different ball game altogether, because there will be multiple visits that has to be made for getting recovery, for which there is a higher operational cost. The delinquencies are higher, for which there is a credit risk, that cost also that goes in. So all these have to be factored in realistically when the policy makers are making policy at policy level. From my own institution, definitely manpower, which is of course in the microfinance industry, there is always a manpower shortage and qualified manpower. So dealing with housing loans of this category will definitely be a challenge, which I'm sure we will have to try to address. There are various institutions that will help hand-holding and training, which I think the industry itself can look together, so that, because we need maybe about 4 or 5 people trained, so for which we can't have a single training program, maybe all together can organize training programs. So definitely manpower upgradation and dealing with loans of this ticket size. I'm sure everybody is used to dealing with a housing loan of 20 lakhs, but dealing with a housing loan of 2 to 5 lakhs or 3 to 5 lakhs will be definitely a different ball game altogether. I'm sure people will have to be trained in this area. These are some of the most important challenges, but I don't see myself not being able to circumvent any of them, because we have worked in the past and there has been so much manpower created in the microfinance sector. Upgrading their skills for a higher ticket loan is, I think, least of the problems that I see right now.
Thank you very much, Neeraja. I totally agree with you. It's not the product, it's also connect with the people. Over the period of time, we could build up the connect with the people, and they are good to us always. So this is one of the things. I was asking you this question because there is experience of Nepal. They can have this, your collateral in the microfinance system. So I was asking, you have collateral. So why are you calling it risky? So they are telling that okay, fine, we do have this collateral, we can accept collateral, but those collaterals are not marketable. So there lies our problem. So this is why I was coming to you, that what kind of things are you seeing, that although there will be collateral, but will there be anything? But I am totally with you. The connect we have created over the period of time, the Credit Information Bureau report we have created for them, it will be helping us immensely to go forward for it. I would come to Mr. Goyal for this one, in response to Neeraja's this cap on rate of interest and this thing. Do you have anything to contribute in it?
Yeah, any subsidized lending which NHB receives, it is meant to a targeted segment and to a targeted scheme. And the type of on-lending cap that the Affordable Housing Fund has today, I think 6 to 7%, I think is considerably good to cover the operational and other aspects. And that's what I mentioned in my initial remarks. It's now for the MFIs actually to come forward to ensure that there's some discipline. And if you want to actually enter the housing sector, understand you're going to be competing with the housing finance companies and banks, and pricing is very, very critical for any person. Our Affordable Housing Fund is also on a fixed rate, which this particular target segment understands. And if the MFIs are not going to get this financial discipline, I think what you'll see is many of these MFIs converting into NBFCs, HFCs, which we have very good examples also. So it's important for the MFIs, if they want to venture into housing, seeing the type of other institutions which are giving it, they have to adhere to certain discipline, financial discipline as well as underwriting discipline.
Thank you very much. So I will come to you, Mr. Tripathi, that we have started under the tutelage of NHB, under the guidance of NHB, we have started a liaison between HFCs and microfinance institutions. Are you also in it? If you are in it, then what are you seeing? I mean, what's the progress on that end, and how are you seeing the challenges in that one?
You see, when you talk of challenges, I think that is, I will take the challenges first. Challenges for giving loan to the microfinance companies' customers. In any lending, the first and foremost thing that whether he has repaying capacity or not. If a guy is having 2 lakhs rupees annual income, he is eligible for 8 lakhs rupees loan, and that is more than sufficient for him. That is the first thing we need to understand. Normally 4 times he can take the loan, because the regulation also required that as a low income customer we should not have the incidence of repayment more than 35%. Though MFIs can have up to 50%, but we can't do more than 35%, then he will not have the sufficient surplus for his livelihood. That's one point. I don't foresee the problem in the income, because the migration in income of the people is happening very fast. The guy who was getting 1 lakh rupees about 10 years back, now he's having 3 lakh rupees income, 3 to 5 lakh. So migration from EWS to LIG to loan, it's happening. So that is one point. Second thing, the property. That is another challenge which comes. You use the word collateral. As a lender, we are not asking collateral. We are asking the prime security on which he is constructing the house. If he is living in a typical rural area, here I will just take a minute. There is a very misnomer that rural and urban. That is very typical misnomer. Country is divided in rural and urban only. There are large number of locations which are small roadside locations are there. They are actually providing urbanized type of services, but they are called as a rural. The rural, urban places, we are not looking into that. There also he can get a house in 5, 6, 7, 8 lakh rupees. So first of all, he is making house in a typical rural, where normally government provides the free of cost housing to the very people who are the base of pyramid. Government has already provided 2.6 crore houses and 2 crore further providing. My point is those who are taking the loan, the one is the land. When he is having the land and title is not there, then mortgageability comes a question, because land cannot be hypothecated, it has to be mortgaged. And unfortunately, when title is not there, the state government requires to be mortgaged, a simple mortgage or the legal mortgage. Their stamp duty should be made 0. Because when I am giving a loan to a microfinance customer, his land we can mortgage just as in agriculture cases. By simply, the lender is authorized to mortgage land. In most of the state governments, they have authorized lenders to mortgage the land. Similar authorization should be given when the property in typical rural area. Second point, what we do now, we ask him, you make a gift deed, create a deed and then you do, then he honestly has to spend money. Now, second point, where he buys the piece of land, then there is no problem, he has a title to that. That can have an equitable mortgage. So the mortgage, the property is clear. In many cases, defective title comes, which we are not able to lend, because defective title will not serve my purpose of recovery of loan. Because when I am giving the loan, it has to be a business case. I should cover my operating cost and get some income. Second, because no business can run on social concept. It has to be a business case. That is very clear. And second, recoverability of loan is a key factor. And recoverability of loan, in some cases, in small loans, we can go to National Guarantee Corporation, take the guarantee. They provide guarantee up to 70%, one size fits for all. My request to the National Guarantee Corporation, or through you to the government, we raised the issue in one of the meetings also, for 5 lakhs rupees loan, they should provide 85% guarantee. If you go to the credit guarantee fund, for the small scale industry or the micro business loan, there up to 5 lakh rupees, 85% guarantee is provided. Why can't be provided here up to 5 lakh rupees loan? That will give comfort to all lenders. In case of eventuality, my 85% is covered. That risk is gone. Third comes, The problem comes to give loan to microfinance customer. They are used to get a loan of 1 to 3 years. Here we will give them loan for 20 to 30 years. Up to 70 years of the age, we give the loan. If the guy is 40 years, he can get 30 years loan. The small EMI will be so small, he can service it. But that requires a proper education to him. In the beginning I told, they are very honest people. House is their dream. They do not want to play with the houses. Fourth case comes where the state governments are allotting the houses are for 3 lakh, 5 lakh rupees. They are finding it difficult to get lenders because their class is not permitting lender to foreclose the property in case of default. Lender do not ask moon. I think in Chennai, Tamil Nadu, we have gone many times with Mr. Mukundan also. They are saying, I will not allow you to foreclose. When I am giving the loan, you allot that house to another customer of microfinance whom I will transfer my loan. So I should have a comfort that my loan is getting secured, because we are not giving loan unsecured as a housing finance company. The challenge of repayment is one thing, but that I am not worried if these things are taken. One, the transferability of the property. The stamp duty should be made almost zero. I think they should not be charged a stamp duty like a farmer. Third, Prime Minister has told in the scheme itself that wherever the person is not having the land for constructing the house, he should be given patta by the Gram Sabha. So if that is summarily followed,
right,
I think probably everybody will have a house.
We have that experience also. We were running a project. My colleague Sangeeta is also here. So we were running a project in Odisha. So Odisha government, the same problem with HFC, that they couldn't finance because of this land ownership was not there. So Odisha government has given them some kind of patta, some kind of ownership, and then it has started rolling on. You're very right. I mean, both of this credit guarantee and government representative, both of them are here. Possibly they are taking the note of it, what kind of challenges we face, and we will be taking this one forward as well. But now, Patrick, I need to understand from you, you are listening from the onset of this discussion. There are gap in financing, there are gap in credit guarantee, there are gap in possibly repayment, although I don't believe in it because microfinance clients, they believe, and also there is a gap of infrastructure. What's your take? How, in which country, or if you can give us some international experiences on it, that how these challenges are being taken care of in other countries will be helpful for us to think out of box. Over to you, Patrick.
Sure. Yeah, thanks for that question. So I think there's a couple of examples that are worth looking at. One, because a lot of what we're talking about here is how we can ensure that the lower income people can qualify for the loans and have them registered as housing loans, right? We know that microfinance institutions can make microfinance loans and people can use those loans to fix their houses. That's fine, but that's not a housing loan. So how can we get that into the housing category? And Colombia has done a very good example of segmenting the market. I think my co-panelist here was talking about market segmentation earlier. So they've done a good job at segmenting the market, and the government subsidy and the credit guarantees are all connected to the segments. And so you don't have to worry so much about the specific policies, as long as you can clearly identify who fits into which segment. And then the subsidies and the financing flow from there. The private sector is able to provide the finance, the public sector provides the subsidy, and it's all very clear because they've segmented the market in a very clear way. So that's one example. Another example that is really well known internationally is the case of Egypt. Egypt has a challenge not unlike India, I suppose, in that they have a growing population and that they have a limited housing stock. So they need to build housing and they need to finance, or they need for people to be able to finance the purchase of that housing. So the government of India has created an institution that does both. So it both builds affordable housing specifically for workers in urban settings, and it finances the mortgages that are tied to those. In that way, it's able to more efficiently ensure that the subsidy is distributed throughout the system. Again, it's related to market segments. So if you're a very low income worker and you purchase one of these units, you're going to be paying less and the government is going to be subsidizing more. If you're slightly higher income, you could be living in the exact same unit because it's built by the government, but you're going to be paying slightly more and the subsidy element will be slightly less. So I think those are two examples where the market segmentation plays the key role in determining exactly how subsidy is going to complement the private sector finance. And that's allowed these countries to deliver affordable housing at scale. Low income housing, is that what we're calling it? Low income housing at scale. And scale is really the key because you can do all kinds of one-offs, and financial institutions can make a few loans here or there to show their goodwill, but you have to be able to do it at scale in order to really impact that market demand that I was talking about earlier.
Thank you very much. We are coming towards end. Now I will come back to all the panelists. A single statement on how we can make this low income household initiative strengthen. One statement. So I will start from Mr. Goyal. One statement that how can we make it stronger and efficient? What's your view?
MFIs need to take the lead.
Yeah. I think I thank Mr. Goyal. Definitely we are all ready to take the lead. Only the policy environment may be little more tweaking, which some things we will definitely look into it and brainstorm with each one of them with the help of both Appetite for Humanity and Sa-Dhan, so that we will come to one consensus on most of the policy matters. So because if it has to go to the field, to the level scale that you all are talking, especially when it comes to less than 5 lakhs, MFIs are the only ones in the field that are available with the ground on the feet, and they are the only ones who can do this.
Yeah, first one thing I would like to tell you how it can become more successful. There is a co-lending guidelines of RBI which permits the NBFC to NBFC, NBFC to HFC, HFC to bank, and NBFC to bank can be done. If the microfinance institutions can tie up with the various HFCs, because they do not have fund, they have the customers, and they go into co-lending model, that will succeed. But for that system, there are many requirements will be there, and the mindset and working style of microfinance companies, from the unsecured loan to secured loan, has also to come. All those things, I will not elaborate on that.
Yeah, I could understand.
I fully agree with her. If a positive environment is created, the small glitches can be removed, and government, while making the policy, instead of using the word affordable housing, they bifurcate as per the amount. 1 lakh to 10 lakhs or 8 lakhs and 8 lakhs and above. Because the purpose of the larger segment of economically weaker section will be fulfilled. Government provides a lot of incentive. PMOI, beneficiary-led construction, is this only.
Yep.
You see, PMOI, beneficiary-led construction, affordable housing and partnership, is this only.
Right.
But that requires what is to be done for the loan up to 10 lakhs, and rest should be left to the lender. And up to 10 lakhs rupee loan, the operating cost is very high. They should not insist that you should not charge processing fee, you should not charge, because the customer requires a house. This small money to be paid in 25, 30 years doesn't make much of a difference.
I can understand your point. The way Reserve Bank has liberated microfinance institutions for their rate of interest, that they didn't impose any rate of interest. They have given us other parameters. We are working on it, and we are keeping our rate of interest almost the same. Little bit here and there going on, but almost same. I mean, you are right. Thank you very much, Patrick.
My one would be collection and dissemination of more high-quality data related to the housing sector.
Agree. Totally. And over to you.
Yeah. So I request MFI to get our membership for taking rent income.
So,
Just
yes,
add
please do, please do.
More of such initiatives, actually.
Okay,
These are-
thank you
these are
very much.
wonderful initiatives, and as Patrick mentioned, these needs to be disseminated.
Right, right. So high quality data, Patrick, as we do from Sa-Dhan, from its onset, 25 years back, we started pooling the data and aggregating it. That's what, we are getting, in this shape where we can give lot of data. I totally agree with you. So TCIS and Sa-Dhan, we do have a lot of work to do with all these people. So thank you everyone. Thank you very much for your very open discussion. Thank you very much.
Thank you very much for
Panelists, and thank you Saibal also. May I request Mr. Mukul Jaiswal and Mr. G. Kumar, Sa-Dhan board members on stage to felicitate our speakers. Mr. Mukul Jaiswal.